Hey, what's good, y'all? It's C Will here with the Passive Income Network. And on this podcast, we like to talk about investments, business, and innovative technologies. And today, we'll be focused on financial literacy, the financial services, and of course, cryptocurrency. So, without further ado, let's bring our guest, Mathew Snider, on the show. How you doing, Matthew?
Great. Thanks so much for having me, Sewell. It's great to be here.
Definitely. I'm happy to have you on. It was great to meet you. So, of course, we got to get you on the show and talk about all of the good things that's happening right now. So, can you start off with an introduction? Give you my audience a brief intro about your journey into crypto and financial services.
Absolutely. So my name's Mathew Snider. I'm the Chief Investment Officer of Digital Wealth Partners, which is an SEC registered investment advisor. I've got my Series 65, which makes me a registered investment advisor. And as we know in this space, a lot of things aren't financial advice. So we thought one of the ways that we could build credibility and help folks build wealth sustainably for the long term would be to do so by being a fiduciary and helping them really build out portfolios that help them do just that. I got my start in crypto probably back in 2015, 2014. I wrote a law paper for a business school class on Bitcoin. I had a friend of mine, when we talk about the wallets and we talk about getting people involved in adoption, it was really just about how do I buy you a beer and use Bitcoin for that or Ethereum. And then like, you'll pay the check and I'll send you this money via wallet. And going back and forth on that or treating people to dinners and things was really a great way to get involved in how these currencies work and how people can engage and use them. And then over the course of 2017, we had the ICO boom, and we were looking at a lot of different assets and new ecosystems in that space. So I got really, really involved there. And then over the course of the last couple of years, I come from a management consulting background. So I was always really, really interested in money and finance and how the disruptive technologies of blockchain can help sort of upend the sort of archaic financial systems that we have to deal with today. And so, I spent a lot of time creating content and working to really educate people in the space, becoming a quote unquote expert in blockchain technology and in the financial realm. And we started a bespoke consulting firm called Block3 Strategy Group that, really catered to businesses, helping them understand how to use these technologies. And we just kept kind of going forward. And a couple of years ago, I got the Series 65. So makes you a registered investment advisor. And now I'm with Digital Wealth Partners and we're onboarding folks on a daily basis and, just helping people grow their portfolios.
Oh, excellent. Thank you for that breakdown. So, you were an OG in the crypto if you said 2015.
Sure. Yeah,
Yeah.
it certainly feels that way.
Yeah, definitely. It's been I guess, a long and beautiful 10 years here. So, as we dive in to this interview, Bitcoin, let's start with Bitcoin. So again, you started in 2015. Bitcoin came out in about 08, 09, correct?
Mhm.
So now we see Bitcoin in 2024 hit two, milestone all-time highs. Bitcoin went over 70,000 in about March or so, and then over 100,000 in December, which is
Mhm.
amazing. So, what's your thoughts on Bitcoin coming up in the next few years, and like the rumors of strategic reserves in the U.S. and various other countries and companies? What's your thoughts about Bitcoin and mass adoption?
Well, I think when we look at crypto as a whole, I feel like it's really become the teenager now. It's
Hmm.
kind of getting ready to drive. Maybe it's got its license, getting ready to go to college. It's no longer in the baby realm. It's not a bunch of small people kind of working around this stuff. You've got institutions now involved. You've got governments. You've got BlackRock. You've got a new presidential regime that is really making this a point of technological adoption, putting America first, et cetera. Whereas for the last 8 years or so, it's been, we don't touch that. We're not going to look at it. Don't even talk about it. Put it under the rug and hope it goes away. And as we've seen, it's not going away, which is great. So I think from being here for this long, it's amazing to see the tailwinds. I think that we're going to see for the crypto space in general, and more specifically with Bitcoin, as we see larger institutions, other wealth managers, registered investment advisors, high net worth individuals, family offices, pension funds, endowments, all of these like places that just have tons of capital sitting on the sidelines in cash, I like to think of this as a pool. The crypto space is a pool, and there's a lip of this money, which is just like there's so much money that is just sitting in cash held by institutions. And the legitimacy that's being built around this one particular asset as either a strategic reserve, as a hedge against inflation, are all really positive ways to look at it. And it's helping solidify this mentality that this is a legitimate asset class. People need to start looking at it. And it's, I feel like in a couple of years, you're going to be saying to yourself, oh, is now the right time to buy? Is it cheap now? And I think one final piece to this that people really need to start opening their minds up a little bit about. I talk about how, probably 10, 20, 30 years ago, the idea of a $1 trillion company was like anathema. There was no way that a company
Oh yeah.
was worth $1 trillion. Now we got like 7 or some ridiculous number, right?
Yeah. Like
So the fact
multiple
that
trillions.
yeah, exactly. So the fact that there couldn't be a quadrillion-dollar company is not out of the realm of possibility. Now, is it going to happen tomorrow? No, but people need to be okay with the understanding that there's going to be an increase in wealth and an increase in money and value across a whole bunch of different sectors. And we're not just we're kind of at the roof point. We're kind of at the benchmark right now where we're starting to see this incrementally go up. But in the next 4 or 5 years, I think even with the proliferation of AI and people adopting these currencies, we're going to see a massive unlock of value in the world writ large.
Yeah, definitely. I see that happening, and because like when I first got into crypto a few years ago, more like 2020, early 21, when I really understood it. So I'm in my 4th year, right? I was like, man, how does this stuff keep going up, right? And then I get the really harsh bear market, 22, 23, and now we're even higher. Like the whole crypto market just peaked at like 3.6 trillion, 3.5 trillion, right? And then Bitcoin still obviously dominates most of that, touching about 2 trillion. And when I listen to Michael Saylor, I always laugh. I'm like, man, I should have mortgaged the house in 2020, right? Because he seemed to be correct about this.
Mm-hmm.
So I do see it going, much higher for farther and longer, of course, with the cycles of up and downs with the volatility. What's your thoughts on Ethereum, right? One of my favorite blockchains to use is the base L2, layer 2 for those who don't know. And they have scaled Ethereum essentially, and the fees are much lower. So those DMs I get about, oh, why am I using Ethereum? It's easy to be like, hey, listen, I'm using Base, however, it's still Ethereum. So what's your thoughts on Ethereum and the new on-chain economy that they're building?
Yeah, great question. I think when we look at sort of layer ones as a competitive market, Ethereum is certainly a first mover. It has a lot of advantages. It has a lot of the devs. It has a lot of the those advantages that we would give to the first movers. Of course, now we've seen a lot of challenges that come up with either it's a Solana or some of the other L2s that provide additional nuanced advantages or cost benefits for using their particular chain versus another one. I think we're in this position now where they even may start just working together, or like Optimism and Base, for example. Now you're going to build other ones within Ethereum that are much cheaper, faster, better, and they really are about building applications for people. And I think that's one of the hardest things with Ethereum. Ethereum is meant to be sort of a dev protocol. It's meant for people to build applications on top of it. It's not necessarily meant, like Solana, for example, to be a retail layer one or a retail chain. You see all the degens on Solana and pump.fun and all this stuff. It's because it's fast, cheap, and easy, and they sell and market directly to the retail people. So when I see the proliferation of Base, which I'm also a huge fan of, you did a great interview with Luke Youngblood over at the Moonwell organization. I'm just so inspired by the work that these other devs are doing within that ecosystem. They haven't left. They haven't said, oh, this is not we can't solve these problems. They've taken an incredibly secure and an incredibly robust infrastructure that is on Ethereum, downtime zero. Can't say the same thing for Solana and some of these other chains. And they're building incredible opportunities for people to participate in decentralized finance, democratize economies, and really build new applications for a retail user, which I think is really, really important.
Yeah, definitely. Like Solana has turned into a true casino. It's
Mm,
insane, especially with Pump.Fun. As you said, Ethereum to build is a lot more complicated. You need a different skill set and
mhm.
information. But Solana is like they like 3 clicks and you can launch a coin, 20,000 coins a day, basically. So it has been amazing to see Solana's rise. I'm personally not the biggest fan of meme coins, but I do understand their place in all of this, right? I'll say Solana is DraftKings for
That's good. I
cryptocurrency,
like that.
really.
Yeah.
So that's how I look at it. And some people like to gamble, so we can't we can't fade that part of it. But when we
It-
think about, oh, go ahead.
no, if anything, it just brings in capital, right? So, and that
Exactly.
capital is gonna, if you're gonna lose it, it's a PvP, right? Somebody else is gonna get it. The devs are gonna get it. It's gonna go somewhere. So as long as people are putting money in the ecosystem, you meme coin all day you want. Like, it's fine. Like, there's always a place for those people. There's always a market for that. All day, go for it. As long as you're putting money into the system, I think it's a great thing.
Exactly. I agree with that. So also with base, I do love, like we talk about the Luke Youngblood interview. Make sure y'all go check that out if you haven't. But yeah, debit cards, bank accounts for the unbanked, things that are spread into countries that actually need it a little bit more. And I know in the
Absolutely.
US in particular, that's why we do have a big gambling culture because we have a lot of the financial infrastructure. However, I do see it changing more for us over here. So just yesterday, at the time of this recording, the a wallet called Exodus Wallet
Hmm.
has just put its stock on the New York Stock Exchange, and they're also tokenizing their asset on the Algorand blockchain. So the future is being tokenized, and then there's other platforms like tokenized real estate and other
Hmm.
things. What is your thoughts on the whole RWA real world asset classes and tokenized assets?
I think this is going to unlock an incredible amount of liquidity in the system. Just in general, being able to fractionalize a lot of these things. So Berkshire Hathaway stock is something like what, $400,000, and they had to issue a second class because people couldn't afford one share, but they wanted to participate in this strategy. Okay, well, that it prices out so many people that could be looking at a strong investment opportunity, but because they don't have the ability to break that into multiple pieces and they don't have a way to do that from a technical perspective, it makes it next to impossible.
Mhm.
Robinhood was one of the first applications that allowed you to purchase fractional shares of a particular company or stock. Very cool. Now that we're seeing this, and when we look at like things like real estate and our part of the business, some of the stuff, the work that we do, we have a tokenization of special purpose vehicles platform. There's a whole mess of paperwork and a whole bunch of problems with private equity and being able to spin up a particular investment and then having that investment locked up for 5-10 years at a time. But if I created a platform based on smart contracts that allowed you to pull liquidity from an investment and borrow against that and deploy it
Yeah.
somewhere else, now you've unlocked a whole ability for people to get liquidity in the ecosystem, which allows them to go do other things and spend money and participate. So the proliferation of tokenization, I think, is just going to be we'll have questions of like, what can't you tokenize, right?
Yeah.
And
Disagree.
it'll go from everything from like tickets to an event or things like that, to art, Ferraris and things like that, which they already kind of do. But now you're just going to see it proliferate, and then you get to build applications on top of it. And I'm just very excited for that sort of proliferation of technology.
Yeah, same here. Because I'm thinking like, so rumor on the street is Coinbase stock. They're trying to figure out how to tokenize Coinbase stock, and I think that
Hmm.
would be the perfect asset to tokenize because most of us are bullish. Coinbase in the U.S., number one
Hmm.
for cryptocurrency, and then Binance kind of with CZ's trouble with the U.S. is kind of like out of our mind. So I think there's more value going to Coinbase because of that.
Hmm.
But I can imagine like, do you know like if you're going to tokenize a stock or what's your idea how could it work? If we got like most public companies don't even tokenize or I guess put their whole company on the stock market, right? When they go
Hmm.
public, just a
Hmm.
portion of it. So
Hmm.
what do you think? Will it be a portion of the assets be tokenized on the blockchain? Like what are you thinking?
So there's a couple ways that they could do it. And if folks are familiar with like preferred shares versus regular shares, common stock, there'll probably be some kind of designation. Of course, there's not a ton of regulatory clarity about this, which we would hopefully get coming soon. But one way that they would do it, I can envision a couple ways. One, they would buy back some shares and they would say, okay, there's going to be a set of shares that we're going to release out to the public that'll be available for consumption, but they will only be available on the base blockchain, as you can imagine. And so people would then have the same, I would assume they would have the same sort of rights, any voting rights that you'd get from holding a particular token. I would be very curious to see how they are stored and how they are traded. Because if you have Fidelity, for example, is Fidelity going to support buying and selling the traditional asset as a security versus the tokenized asset as a security? And so every security, every stock has a CUSIP, CUSQSIP. Yeah, CUSIP. It's like the identifier for that particular stock.
Okay.
And I would be curious to know if they list a different CUSIP for Coinbase digital or Coinbase tokenized stock. So there's a couple different logistical things to think of, but in the general treasury of what their stock is, they can either issue new stock or they could buy back stock and then reissue that as a digital version. So it certainly would be very, very cool for them to do. They're already publicly traded, so they can kind of circumvent the issuing a security because they already are a security.
Yeah.
And so they don't have to worry about whether or not this is a security. They can do this intentionally, knowing full well that it is. And again, when we talk about whether something is a security or not a security, I want people to remember and understand that, one, it's totally okay for things to be a security. What's not okay is for you to sell those to people as an unregistered security. And even if things become a security, the point is that you now have regulatory clarity about what this thing is. And that's really where we get a lot of the gray area problems right now. But I think Coinbase would be an incredible use case for them. The narrative is perfect. And I would love to see them beat like a BlackRock to it, or some, other, Exodus is great, but theirs, I believe, is just a traditionally traded stock. So even beating a company like that to it, I think it's like a perfect way for them to sort of just build more adoption in the space.
Yeah, I think it'll be amazing. Like Coinbase, if you're listening, make it happen, figure it out. I think that would be great.
Also, because most people in the crypto space, a lot of them don't own traditional stocks or traditional assets.
They're anti-stock.
Yeah. And so now we really get into bridging the two together and stop this sort of tribalism about what is crypto and what's not crypto. I think that's a powerful narrative that they could drive for sure.
Yeah, and then you got the new administration, Trump's administration coming in. They're more bullish on crypto. Gary Gensler resigned, right? I think that
he's out.
One of the best things that happened for crypto. So that's really cool. And then you got just more senators like Senator Loomis and all these other people, or she's in the House or the Senate, right? But these people are more bullish and they're into crypto. So I think that does just open, the door up for the next few years, basically. All right, so. Absolutely. Let's get to Digital Wealth Partners. Can you give a nice breakdown again of what y'all do at Digital Wealth Partners, and then also talk about like what do y'all say when people want to invest in crypto? Like what's the process like there?
Yeah, so Digital Wealth Partners, we launched in September. I've been with the firm since February, building everything kind of in the background. We're an SEC registered investment advisor, meaning we can take clients from international spaces or anywhere in the United States. We provide investment advisory services about your portfolio or about your crypto portfolio, or traditional, doesn't really matter. At the moment, we have about 200 clients who've signed on with us and about 150 million in assets under management. All of it is crypto. So people have come to us and they said, yeah. And the reason they do that, the big use case right now is, one, a lot of people would love some help understanding how they can engage financially. What are some options I have? Can I borrow against this asset? Can I put this asset to work? Can I engage in private placements? What are my options? But the big thing that we provide is institutional and insured custody. And what that means is that we are able to take your assets, place them in a custodian that has an insurance policy on your vault, particularly for up to $100 million. And we hear all these people talk, not your keys, not your crypto. And I completely empathize with that notion. The challenge is when you have $4, $5, $6 million on 2 or 3 ledgers in your house and they're in a safe that somebody could pick up and walk away with, or if you're in, God forbid, Los Angeles and your house burns down or something like that, all of a sudden being your own bank isn't so cool anymore. And if
Oh,
people try to break into your house, these people might know who you are. We had the ability to put all of these client assets into a custodian that protects all their assets and insures them. And there's a tri-party agreement involved, so they can't, we can't make any changes on their behalf. They're the ones that have to give us instructions. It's multi-sig. And they get the ability to talk to a few different advisors who specialize in this space. If you go to anybody, and I know this because a year ago yesterday, I walked to 25 wealth managers in my neighborhood in Raleigh-Durham, and I knocked on their door and I said, "What's your crypto strategy?" And our clients asking about this, and only one person wanted to talk to me. Everybody else is going to tell you to sell your Bitcoin. They're going to tell you to sell your ETH. They're going to tell you this is, we can't handle this. We're just not there yet. So we're the first digitally native registered investment advisor that helps put your assets in institutional custody. And then we also help people get liquidity against their assets. We help you borrow against them, or we help put you into strategies where you can earn yield on assets or earn returns on assets that may not have a native staking yield. For example, a lot of our clients have XRP is a big one that they hold. And there's no native staking. There's no way to earn additional XRP. You can't contribute to a network. You can't lend it out in a specific way. And we're putting a number of different pieces together that allow people to contribute their capital and deploy them to strategies where they can earn more XRP or earn cash for having their capital allocated.
Amazing. So where most of your clients, are they US or is it like a combination of international?
About 70% are domestic, and then about 25 to 30% are international, like Australia, Europe, Canada.
And that's good to hear because crypto is global, right? And but we also, as a U.S. citizen, we want the U.S. to definitely dominate and be involved as much as possible because it comes back and help us. But damn, that's great. Because of like Jamie Dimon and all these other people in the media, like basically sell your Bitcoin, scam is what do you say? It's a teddy bear, or however you say it, a rock or something like that. But we know the truth is that they're also helping people custodial. They're selling it to the high net worth individual clients and whatnot. So I think that's another, media narrative trick. So it's good to hear that Digital Wealth Partners is, upfront with it and focused on crypto. Very positive.
And there's so many people that kind of fell on their face and made a lot of money, and they just aren't really sure how to do with it. How do they plan? How do they estate plan? How do they figure out how to set up trusts? How do they make an LLC? How do they do this? And how do they mitigate taxes? There's so many things that come up once you've made a lot of money that a lot of people really don't have the expertise to do. So you already did the good work. You already took the risk. You hit a number of home runs. You were in that Soul Casino, and now what do you do, right? And so how do you get beneficiaries involved? There's a lot of things to think about. And in some cases, they only have really high risk assets. And I would love to put you in the S&P 500 index if I could just lower your risk profile a little bit.
Yeah, it makes sense. And a lot of the parents out there that want to, get custodial accounts, even myself, we're all thinking about for our children, buying them some Bitcoin, buying them some Ethereum, because we know like when 20 years from now, when these babies grow up, I'm pretty sure that Bitcoin will be around, be like 40 years old at this point, right? And so that's an asset that people definitely are interested in.
And wouldn't you love it if you started putting Bitcoin away now for a son or daughter in 18, 20 years to have them be able to pull that out, maybe tax-free, right? So there's some interesting ways that we're working. I mean, there's so many financial instruments out there that have not even come close to touching crypto. We're talking about insurance, annuities, ADRs. Like there's so many things that we're excited about trying to do at the company and really build a full suite of opportunities for people to participate who are maybe digitally native first.
Yeah, definitely. So, and we're in that generation of like, we're digital natives now at this point, and then it's only going to continue. So that's great. Keep up the great work.
Thank you.
As we slowly start to close out, let's talk about your new book, Warren Buffett in the Web3 World. What was the What was the purpose of writing this book, and break down what's inside?
Awesome. So we took 1,300 pages of Warren Buffett shareholder letters over the course of 60 years and condensed it into a snackable, easy to read investment guide for people in the Web3 space. Thinking, Warren Buffett called Bitcoin rat poison squared. People don't know that he has a major investment in Nubank, which is a South American bank that uses blockchain technology all the time and a digital currency. So even though he doesn't really like it, he's a little bit exposed. And we figured just because he doesn't like it doesn't mean you can't learn from his investment prowess and his wisdom. And so we applied his wisdom to your sort of investment theses in the Web3 space. It was such a fun project to write. We'll probably do an expanded version in a year or so where, we'll have the next few shareholder letters in there. Maybe he's bought some Bitcoin by that point. And then we're also going to tokenize it on the Cardano blockchain as well, which I'm excited about.
Oh, wow. Okay.
Yeah.
Tokenize the book, you say?
Tokenize the book. Why not?
Yeah, that's smart. I like that. And Warren Buffett's funny too. Charlie Munger was, rest in peace to Charlie Munger, great investor, but he was funny too. But they ended up buying Apple, right?
Yep.
They were against Apple, so I wouldn't be surprised. And what people do want to see, we know Microsoft recently, their shareholders rejected buying Bitcoin, but they'll probably double back on it in the future. But if we see Berkshire Hathaway with all the cash that Warren Buffett got, that could be amazing to see him add in some Bitcoin.
Like you do the math, you're like $800 billion in cash. Can I just have like 1% or 0.5% or a tenth? Can you just
Michael Saylor say 5%?
Can you just do a little bit?
That would be crazy. So is there anything else you would like to share, and also give the people some info where they could find you?
No, I think this is great. You can find me at Mathew at digitalwealthpartners.net. You can find me at Mathew DWP_ on Twitter. I'm open to DMs or any way to just connect with people and hopefully educate them about the space or answer any questions from a financial perspective. I come from a space of really trying to, again, blend these two things together and always lead with education first. As a registered investment advisor, I am a fiduciary, which means that I have to put all of your goals and risks and objectives in play above mine. And I have to disclose all the things that I have regarding investments or all those things. So when people, are always worried about like, what can you talk about, what you can't talk about, the bottom line is that we have to put you first. And we look forward to just any questions that folks have or any way to engage.
Excellent. Thank you. Stay backstage here and I'll close out with the audience.
Sounds good. Thanks so much.
Thank you. All right, so another great episode. We have a fiduciary on the show. So make sure y'all, if y'all have any questions, leave them in the comments. And as always, reach out to the guest, Mathew Snider. His info will be all in the description. So if you want to get directly contact with him, feel free to do that. And I'll put his Twitter and whatnot on there. But again, a very educational episode. We discussed a lot, and check out the new book, Warren Buffett in the Web3 world, and we can hook you up with a copy if we need to. So again, I appreciate y'all. See Will with the Passive Income Network. Make sure you like, subscribe, and we will see you on the next video. Peace. Passive income. Gold in my dental. Thank God for my mental. Investor fundamentals. Told my girl it was simple.